Hello and welcome to the Academy of Value Investing. Today we will discuss an important concept which can maximize your returns. We will discuss about what is arbitrage. You must have heard about this term, but there is a confusion regarding what this exactly is. So I'll tell you the most simplest form of arbitrage, although you won't be able to use it very frequently, but you will understand what is arbitrage through this example. So in India, most of the companies are listed in NSE and BSE as well. So think about this. This is a hypothetical situation wherein what if you could do this? So this is the same stock, say Tata Motors. On NSE it is available at 100 rupees. On BSE it is available at 102 rupees. So imagine if you could have done this. You bought from NSE at 100 and you immediately sold at BSE at 102. You would have earned 2 rupees instantly and while taking minimal risk. So this was an example to teach you what exactly is arbitrage. You can't exactly do this easily, but I'll tell you other forms of it which you can definitely do. So there are other kinds of arbitrage as well which we have discussed in this course. First, let's discuss about holding company arbitrage. So what is holding company arbitrage? This is a situation wherein the investment value of the company, say Godrej Industry has investment of 500 crores in Godrej Consumers. So the value of its investments is 500 crores and yet you get the company for 300 crores. So you are getting 500 crore worth of investment at just 300 crores. So this is called holding company arbitrage. We have discussed this in detail in the course, so do read that chapter. Next, we will discuss time value arbitrage. This is what each long-term investor does. So what you basically do is you invest in a company that you think is undervalued. Then after a few months, the valuation of that company rises. Then you sell it because now the valuation is at a premium. So you're buying at a discount, selling when the market appreciates the value of that stock. So this is called time arbitrage. You are waiting a certain period of time for that valuation to rise. Another example is special situation arbitrage. So a simple example would be buyback. A stock is currently trading at 100 rupees. The company comes with a buyback wherein you can give the share to the company at 150 rupees. So if you are selling at the stock market, the current price is 100. You will get 100 rupees. But if you give the stock to the company, you get 150 rupees. So this is a special situation arbitrage. A lot of investors take good use of it, and this is a great way to earn quick returns. This arbitrage opportunity also offers a good chance during special situations such as mergers, wherein the shares of two companies are now merged to form a new company. So the share swap ratio sometimes is such that it benefits a certain company. So that is again a situation which you can use to your advantage. Let's discuss another kind of arbitrage, which is currency arbitrage. Let's take three currencies for this: Indian rupee, US dollar and euro. Now think about this. 70 Indian rupees is equal to 1 US dollar, and just take the hypothetical example that 2 US dollars is equal to 1 euro. So what should be the conversion rate between Indian rupee and the euro? Remember, 70 Indian rupees is equal to 1 US dollar. 2 US dollars is equal to 1 euro. So logically saying 140 rupees should be equal to 1 euro. But sometimes due to exchange rate fluctuations, this might happen that you are getting 1 euro for 135 rupees. So what did you do? You bought 2 euros by investing 135 rupees. You converted it to dollars and then you again converted it to rupees. You got 140 rupees. So you invested 135, you instantly got 145. You earned 5 rupees by doing currency arbitrage. So this is another kind of arbitrage. So hopefully you understood what arbitrage is and how you can make use of certain arbitrage situations. And at last, pay special attention to situations such as buybacks. These are a great way to earn some quick money. Bye bye.